Unemployment Friday, first day of the month, November 1st. Unemployment Friday was down in here at 7:30. It's really important to know where we are before a big number comes out. It was 39. We never looked back. They jump up, right? And as they get up to this 48 even area, I said, listen, they're not even making an attempt to go lower. So you got to expect a grind and a rally in a market that kind of liked those numbers. Now, funny thing happened. We had another important number, the second biggest number of the month, coming out on the same day, an hour and a half later, 9 Central, and that was ISM. That was where this market action came about. Now, it comes off because, and if you know anything about trading, you got to know how to analyze numbers in real time to put yourself in a position to capture opportunity to get a market long when it's cheap, short when it's expensive. Why did the market, in my opinion, get cheap down here at that moment? Because it went down for a little softer than expected ISM number, but only missed by half a point. Now, you got to understand a couple things, and this is how I prep people that listen to me. Number one, the market's concerned about ISM because the last 2 months it's missed to the downside into the 40s, and the market hasn't liked that. It's kind of given people the concern of a recession and the U.S. economy going the way of Germany and maybe China and some of the global weakness that we've had. The last 2 months, this number has worried consumers or economists and investors, all right? So they're on eggshells. So it misses, but only a half a point, not 2 points, not as big of a miss last month. So it drives lower. That doesn't make it cheap. What makes it cheap is the other component in this number is prices paid, which there was an estimate for 50, but it printed 45. Now, I'm not an economist, but I understand these things as a trader to find where and how and strip out randomness to a reaction to a big number. The downside miss or move didn't surprise me, but it was only a half a point miss. This is what's going through my head. Prices paid miss to the downside, which is good because it's an inflationary number. The lower that number, the less worried investors would be concerned with inflation. Well, why is that important? Well, this week, the central bank, which their number one mandate is to fight inflation, lowered rates. You don't lower rates if you're worried about inflation, and you can't lower rates if there's any kind of clue there might be inflation on the horizon. So the fact that this number comes out not as soft as people were worried about on the headline and weaker than expected on prices paid component was like a relief. Okay, there's no inflation. Maybe they could cut another quarter next time, maybe not, but at least they'll stay away from being hawkish and raising rates because inflation's an economic growth killer and all that stuff. And that's when I had said when we were trading around 52 after they dumped down. This was all within 5 or 10 seconds that it got cheap, and that was a moment to buy it, at least not get short. A moment to buy it for the kickback up. And then it just sideways to higher for the remainder of that move. And then the market died off at 62. We had seen something that a lot of longs were taking profit around 61.5. And I had said that the downside, the best chance for the downside to be the right side was coming off 62. It was. And then here's the last thing that I'll tell you with the highlight. And I want to stress this because it's not coincidental and it's an easy thing to recognize. That's why you got to constantly be around people who know what they're talking about and looking for the right things to keep you apprised of what's important and what's not, but at least say what pattern is important. When you can identify a consolidation box like this, take the center of it, and it's generally a good target. Before it's a good target. While we're up here, I said 57 is a good target. It was a good target once. It was a good target twice. What does that do? It gives you a better chance of getting out at a good price if you're short. It keeps you from getting short in here and taking immediate heat because you're looking for a breakout. There's a lot of things, good targets, good support resistance in real time create. Most people come up with their support resistance from nothing but what happened in days prior. How about what happened in this game on this day? That's where you want to get your best support resistance levels, your best areas you're going to fight in and fight out of based on how the game is going today. How do I know if the running game is going to be effective? Well, during the game is going to give you your best clues, not just the game analyst by the video you were watching to prepare for the game, but it's working. All right. It's working. They're having trouble stopping the run. What does that do? It sets up the passing game. Doesn't mean you can run all game, but it means we get set up for a big play down the field. People who know a game know what to watch for in order to anticipate better. So just remember that. When you know what to watch, then you know how to anticipate. And that's what trading is, trying to sharpen your anticipation skills. So you can get out of losers quicker, you can stay in winners longer, you can enter and exit with better accuracy regarding timing. You're okay to be wrong because you know you're supposed to be, and you can consistently or constantly strip out randomness, which is the only way to get and stay successful. Is if it's random, then you're going to feel lucky when you're making money, and that's because you are lucky, that is. So a lot of people have 2-3 months of profits gone in 2 or 3 days because what they were doing was just random, and eventually the market's going to take it back. There has to be some edge, some advantage you have over those that you're trading against. And it's usually where you could find others puking, you could find others stuck, you could find cheapness in an initial emotional reaction from a number. Just think of the analysis I gave you. Might sound like I'm really smart. I'm not. I'm just smarter. I'm smart enough to know I'm not the smartest guy in the world. And I'm smart enough to know what's important to know and what the basics are and get good at the details of the basics. They talk about Belichick, the head coach of the Patriots, all the Super Bowls and the great coach he is. And he's an attention to detail guy, but he's not an attention to every detail about everything. He's attention to details on the basic, simple stuff. What's the quarterback's weakness that we're facing? It's this. Okay, how do we adjust and make sure we attack every detail of our adjustment to attack his, and that's it. And then they go from there. Not attention to every detail, attention to the details of the basics. Don't gloss over the basics. All right, guys, have a safe weekend. Remember, things tend to slow down on Fridays, especially unemployment Fridays, and that's where we're at.